Hello and welcome to the Truth About Real Estate Investing show. My name is Erwin Cito, and it's only 2 weeks until the Wealth Hacker Conference. The timing couldn't be better for an event like this on how we manage this upcoming economic storm. Winter is here, or it's coming economically, not the season. This is only the beginning, and we will be sharing at the conference how the world is changing. Newer investors plus entrepreneurs who are fearful, as they should be, but like last time, during the Great Recession, which also known as the credit crisis, was the last and best time to make a fortune. Many people did. My regret is I didn't buy more. This cycle will likely be no different. So get your tickets to the Wealth Hacker Conference, November 12th at the Toronto Congress Centre near the airport for a one-day only event. wealthhacker.ca for tickets. Don't forget the www.wealthhacker.ca for tickets. My discount code for you, my favorite 17 listeners, is the 5-letter word truth. Very easy to remember, hopefully. I've asked each of our expert speakers to include in their talks what they're doing with their own hard-earned investment dollars and when. Timing is pretty important these days. Me personally, I'll be sharing how Cherry and I plan on dusting off an old strategy that's fallen out of favor in the last couple of years, but we're dusting it off as I believe the ideal investment property has changed in this current inflationary economy, and we plan on implementing this strategy once the conference is over. I'll be sharing more detail about it at the conference. So hope to see you there, Saturday, November 12th, all day for one day only, wealthhacker.ca for information. Don't forget the W's, www.wealthhacker.ca. I trust everyone had a great week and weekend. As I'm recording, I just came off a short week thanks to Thanksgiving. My brother's wedding was that weekend. I gave a talk at Elizabeth Kelly's event as well, so kind of glad that week's over. My brother's wedding was delayed for 2 years thanks to the pandemic, but it finally happened and it was awesome. It was so great to see so many friends and family who I hadn't seen for quite some time, including a friend of mine who is an RCMP officer. Let's call him Dan. Dan was visiting from Alberta. He used to live and work in Toronto and still keeps his condo in town in Toronto that he rents out. I helped to convince him to keep the condo when he moved as a hedge, just in case he ever wanted to move back to Toronto and in case prices ever went up. And it's a good thing he did, because if he did ever want to move back, he wouldn't be able to afford it. Hence, this hedge worked out. Yes, condo prices are down in Toronto and pretty much every city where there is condos. Most of them are down across the country. But understand, if you look into the numbers more specifically, you'll see that when you already see real estate prices broken up by category, what kind of housing category, you'll notice that condos, for example, are down much less than, say, detached homes that sell for over $1.5 million. The affordable, I'm doing air quotes for those who can't see, the affordable, I think the better term is actually the least unaffordable. Starter home market is still very much active since rents are so high, along with interest rates. It's natural for that demand for entry-level real estate to increase. No different than how no-name grocery store items like President's Choice and Kirkland are selling better than ever these days. Anyways, Dan shared with me how grateful he is for his investment property, as we discussed how the importance of intergenerational wealth is for home ownership. Basically, if you don't have intergenerational wealth, if your parents don't have wealth, then it's going to be very difficult to own a home, and especially Ontario or BC. My friend Dan actually moved out to Alberta for affordability reasons. His top salary basically is not that far off, whether he lives in Toronto or northern Alberta, where it's like a third of the cost in terms of housing. I can't agree more with his opinion that intergenerational wealth is important, and the time that we're in right now is probably the most important it's been in the last 12 years to invest in oneself's education and networking. I can't recommend enough that folks join us on November 12th at the Wealth Hacker Conference. It's our last event changed so many people's lives for the better, but we're hoping to 10x the returns for our attendees this year. On to this week's show. Kyle Pearce, who came to our conference as well back in 2019. He's currently a real estate investor with 22 doors. Cal has been investing since the last recession, being braver than the most. than most. He bought the dip in Florida. He did research it for a while, but he pulled the trigger in 2011. He's done quite well for himself. He's a stock hacker, an online education business side hustler. I mentioned side hustle because Kyle does have a full-time job as a mathematics consultant to kindergarten to grade 12 teachers at his local school board. Kyle is a teacher of math teachers. Kyle is passionate about education, as you can tell. Lucky for us, that same passion for education spills over to the investments area. He loves to share his knowledge and his experience. He's always sharing his research with our community at Stock Hacker Academy, and I selfishly had some questions for Kyle on how to teach math and investing to kids. Now that I think about it, Kyle's method for teaching compound interest, which he shares in the latter half of the show, compound interest being the eighth wonder of the world, his methods would totally work on adults. So make sure you have your pens and pencils ready to take notes. Please enjoy the show. I give you Kyle Pearce. Hi, Kyle. What's keeping you busy these days?
Well, everything is keeping me busy. We're back to school, and I'm telling you, every single school year when we begin, I always in my mind have this, picture that everything's going to be great and calm and organized. And here we are, beginning of October, and as usual, it's a bit of chaos, but it's a fun chaos. It's nice to be back at it.
Elementary, high school? What is it?
Well, my background, I come from secondary. So I was a secondary math teacher for about a decade. And then I sort of moved into a coaching role. And now I'm a K through 12 consultant. So I sort of coordinate, deliver professional learning for educators and everything in between. So lots of hats there. Pretty busy, but I also get the pleasure of working with students and teachers. Today, for example, this afternoon, was in a class and got to hang out and do some awesome, fun math talks with some grade 9 students. So it was a great day.
Fun math talks. We'll get into that in a minute. Just because we discussed some things off the air, I think we should share with the listener, the 17 listeners. I was sharing how my experience is among my clientele. So I have 500 clients. Generally, they're very comfortable with math. And I have some hardcore analytical people like software engineers, architects, people who like even physicians again. But what I don't notice among my clientele, what we don't have is people like from the arts, right? And then I was thinking, my thought is that people who can do math can analyze investments. But even before that, they probably can think logically. We're always address problem. We always have problems in front of us. The big one right now is inflation and interest rates. But then how does one protect themselves from inflation? And then our clients generally come to us already interested in real estate because they already have some understanding. I need a business. I need some hard assets. So you're kind of doing important work to produce more clients for me.
Yeah. Well, it's funny because, I shouldn't say funny. It's not funny because what you've sort of articulated is that mathematics, this is why I love the work I do is that, when I came out of my post-secondary experience, well, actually in post-secondary, I was that kid who memorized everything through school. I didn't really understand why a lot of things did what they did. I just knew, I showed up, I did my cramming the night before, and I was able to recognize enough patterns to sort of get me through. So I was quote unquote good at math. And in university, I was like, well, I'm going to do computer science and math because I'm good at math. And in second year, I sort of, the wheels, as I call it, I say the wheels fell off for me. And what I recognized at that point, I had a professor point at me and say, you don't know anything about math. So yeah, so that's,
nice.
I
wouldn't
was
fly
like,
in today's world.
no, absolutely. And, and honestly, at the time, I sort of shook it off as he's just, a jerk. And that was about it. But the reality is that, 10 years later, as I'm in a high school math classroom, spinning my wheels, trying to help students understand math, what I saw is exactly what you described. There was like a group of students who sort of, it sort of seemed like, oh, like they're the math people. And then there was the other group of students, oftentimes like a larger group of students that weren't math people. And that's sort of like one, I guess, philosophy you could have, or one mindset that you can have, is that, yeah, some people are going to, be more naturally inclined to enjoy mathematics and others won't. But I sort of look at it as more of a nature nurture thing, where our job as educators is to try to help more students feel comfortable and confident with mathematics. And, that's really the work that I do. I'm not doing this work to try to make, those top achievers even better. There are people that's their passion and they want to do that, and that's great. I look at the completely other end of the spectrum, and I look at those students, because mathematics is such a gatekeeper, and you just articulated it. You said a lot of your investor clients, people who are trying to build wealth for themselves, so they can take care of themselves, their families, leave a legacy. They're people who sort of, I'm going to say, won at the game of mathematics, whether the instruction was, sound or not. They sort of were the lucky ones, and I'm one of those people. And I want to, offer that opportunity for more students. So, yeah, that's why I do the work, and I think there's so much more work to be done there, and that's what keeps me, driven to continue this work.
I would just like to add, I tend to skip steps and I leave out context, and which is funny because I say context is everything these days. Uh, one doesn't need to be good at math to become an investor. Like the step first is usually have a really good job, right? In order to qualify for mortgages.
And how do you get a really good job? Sadly, once again, even if they say calculus, for example, is like a major gatekeeper, because some of your top professions, in order to get into those programs, even though they're not math heavy, they use calculus as sort of like a separator. So if you're, strong in calculus, you get into the program over someone else who might be even stronger in the actual area that they're trying to focus on. And they use that as sort of like the tiebreaker, is like, oh, calculus, we're going to take that person. And again, that's a massive challenge. It's a massive issue when, you might be one of these people who sort of got left behind somewhere along the lines.
Actually, it's a great point you mentioned left behind, because I have lots of clients who didn't go to college or university, but they're really smart. So I'm guessing they didn't enjoy school, or they struggled at school, but they're really smart and they learned afterwards, like through application probably. But the life would have probably been easier if they enjoyed school and did well in school.
Yeah. Well, you hear, so many people at Stock Hack, or not Stock Hacker, but Wealth Hacker Conference, Grant Cardone, who, and Robert Kiyosaki. There's so many people who are, let's say, entrepreneurial, who, didn't maybe enjoy the game of school. But a lot of those people, though, still had sort of this, it's like almost like an intuition with numbers, or with how, or recognizing patterns is probably a better way to say it. Pattern recognition is like one of the key differentiators between successful people and folks who are less successful, is if you can recognize patterns. So Grant Cardone says, hey, when I do this happens, I'm going to keep doing that. What better place in mathematics class to give students that opportunity? So, if there's any math teachers listening, I would say, reflect on your own classroom and think about, like, are you giving students an opportunity to recognize patterns and behaviors of how the math works? Because that's what really matters in math class. It's not necessarily remembering how to complete the square or Pythagorean's theorem or any of these other things that we tend to rote memorize.
Do these kids understand the importance, like what's on the other side? As in, like, do they understand, like, you need certain skills and tools in order to get a good job, like, and then become an investor and get ahead in life?
You know what? I think it's hard to say. Like, I think yes, but I think it's also really hard to comprehend what that really means when you're, and I always reflect on my own experience. And, my parents told me, you need to get a good job. You need to, have education as a means to help you get a good job. But the reality is it's sort of like, you have to get out there, you have to experience what that looks like and sounds like. And again, certain students, I think, just have this advantage of like, I just kind of followed the motions. Like I didn't work necessarily harder than a student who didn't maybe go on to some sort of post-secondary.
Mm-hmm.
But I was lucky enough, I suppose, that, I was able to get through and sort of jump those hoops to get me
Mm-hmm.
far enough.
Mm-hmm.
And I think that's a major challenge that we're up against because, I don't think it's getting easier for anybody once you get out of school these days. And I think about your kids, my kids,
Yeah, yeah.
anyone else who has young children, like who knows what that's going to look like down the
Oh,
road.
it'll be impossible to buy a house, but getting a job these days is great.
Yeah, yeah, exactly.
This is
I'd
the
go
best
straight
job
into the
market.
service industry. It seems like I'm looking at the tips, when I go out to dinner, I'm like, holy smokes, how much money do we just spend on dinner? And then you're like, I got to leave a tip on that. Oh my gosh. And I'm thinking to
Yeah,
myself, I'm like, what am I doing here? I
yeah,
should
yeah,
be, I should be serving these tables. So
yeah.
that'll be where
18% is
I'm
the
sending
first
them.
option.
Yeah,
Everything else is more
exactly.
expensive.
Yeah. And they already added the gratuity on there. How
Yeah.
convenient. And I
On
didn't
top of the
notice.
tax too.
Yeah,
Yeah.
there you go.
We already pay plenty of sales tax too. So Kyle, easiest way for me to ask this question is you have kids, 8 and 10.
Mm-hmm.
Hopefully, I already asked you what
No,
I can't share
sorry.
and can't share.
8 and 10. Yeah.
Yeah, 8 and 10. What are you teaching them? So it's supposed to be a real estate show. Are you teaching
Mhm.
them anything around real estate and stocks, anything like that?
I would say definitely not really, not a whole lot with stocks. I know my son is a big Roblox fan. So,
Mm,
once in a while I would pull up the Roblox chart and, we'd chat about it just very informally. I'm very, my approach for mathematics, at least initially, is trying to allow them to explore and inquire and investigate before sort of getting into, the nuts and bolts of things and let them ask questions, kind
mm-hmm,
of follow their lead a little bit.
mm,
More or less, I think I talk more about real estate with the kids, and I try to be open and honest with them about how much things cost. And we describe things like how much like rent would be. Our children are shocked when they think, holy smokes, like $50 is a lot to them. So when they think like every month someone has to pay $1,500 or $2,000 just to live somewhere. And so we discuss those things, and I'm really looking forward to when they get to that age where I can sort of have them hop in the back and head out and kind of get in there and get their hands dirty. So that's
mm-hmm,
something that I'm
mm-hmm,
hoping to do, but I'm
mm-hmm.
also trying to balance that with maybe not force feeding it on them at the same time, because I do
Right,
want
right.
them to actually enjoy it through the process.
Yeah, I'm totally different.
Yeah.
Years ago, I was already bringing my kids for, I bring them for tenant showings, for renovation inspections, and even when we sign the tenant. Couple reasons why I want my child to be there, so then the other family knows that I'm a parent too,
Mhm.
right? Like I'm not just this evil landlord trying to collect my $1,500, $2,000 a month. I have a family too,
Mhm.
and you don't pay rent. I can't afford this either. And I think I think yeah, and then that's math. I think again, some people miss out that we need to collect rent in order to cover these massive mortgages that are inflating with interest rates, right?
Mhm.
That's
Yeah.
often it's
And
often seems to be lost on the tenant world.
yeah, for sure. And honestly, like children learn best through observation, right? And
Hmm.
again, we talked about patterns earlier, right? They earlier they start seeing things and observing things, and then they start to recognize patterns and they start
Hmm.
to see different, oh, like yeah, looking around and seeing like, oh my goodness, a lot of the places that we're renting are a lot smaller than the place that we're living in. And
Hmm.
understanding that it doesn't always look exactly the way your world is to you when you're growing up. And I think that's a huge lesson for them. So maybe I got to get them in the car a little earlier here, following your footprints.
I have no idea if what I'm doing is right. I actually got some flack over an email that I sent out about I shouldn't be asking what am I teaching my kids about real estate. The lady was saying that you should let your kids explore on their own, and when they're old enough, they'll figure out what business they're interested in. But I'm like, how will they know what business they're interested in if they have no exposure to business?
Yeah. It's the same I have the same discussion with sports, for example. You know, a lot of people say like, you know, my kids don't want to play X, Y, or Z. And I sort of say, like, how do they know, you know, like without sort of trying it
Hmm.
and, you know, at least giving it a shot. And sometimes, you know, you learn to love something once you do it. And,
Hmm.
you know, I always say, if your son or daughter or child doesn't like school, are you just going to say, okay, no problem, you know, don't do that either, right? It might not be what you love doing right now, but I mean, I think one of our jobs as parents is to at least give them exposure, and but then trying to find that center, right? It's really hard. Like humans are very on off people, like we're all in, we're all out, we're, you know, totally right, totally left, or, you know, it's very difficult to get to that balance. So
Hmm.
just kind of keeping that in mind, I think helps us at least not overdo anything. Like, hey,
Hmm.
we're going to try all the sports, and, you know,
Hmm.
you're gonna be on all the rep teams, or, you know,
Hmm.
whatever that might mean, but to give them enough exposure so that
Hmm.
they can, you know, they can get that experience under their belt.
Hmm. So Kyle, you're a smart guy. I'm
Well,
right.
how much did I pay you to say that? I keep going. No, I'm just kidding.
Why do you invest in real estate? Because I'm always concerned with confirmation bias, right?
Mm-hmm.
So I want to ask, you know, you seem bright.
I don't know
you're,
about that,
you're
but
responsible for our future,
mm-hmm.
the future of the world. You know, educating educators who educate children and educating children. Why do you invest in real estate? You have a monster pension down the road, don't you? That'll take
Yeah,
care of
and
everything.
you know what? It's interesting because like I have done so much growing. Like obviously, when people are listening to this podcast, they're probably very similar to us, and they realize that, you know, you're constantly learning. What you think you know today is probably not the whole story, and all of those things. When I came, you know, into teaching, I was, you know, my wife, my now wife, she was my girlfriend at the time. You know, we were both in teachers college together, and, you know, we were working jobs and all these things, and we were like savers. Like I was very save minded. I'm like, you know, we're gonna get a house at some point down the road. We're gonna keep saving. So we eventually got a house, and then it was like pay down that mortgage, like that typical, you know, do the right thing, just like mom and dad says. It's like pay down that mortgage. So I was doing that, and then I ran into, you know, the whole idea, like the Robert Kiyosaki, you know, movement of rich dad poor dad, and this was back in, you know, the late, I don't know, maybe 2009 2010, just after the
Oh,
big, you
good
know,
time. Hmm.
yeah, very interesting time. And you know, in my mind, seeing the market, the stock market crash, and having a very little amount of money in my RRSP at the time, it was probably like, you know, $10,000 or whatever it was. Seeing that, you know, basically go down by a third, or, you know, almost half. I was like, whoa, I don't like that, and I had no idea what was going on there. But one thing that I did start recognizing was this idea that, wow, at least with real estate, you know, historically, it has, you know, done well over time. Not that it's always straight up. But then the other thing was I just love the idea, like the tangible, like how I could go and like, I'm like, even if this is worth nothing, I could still rent it, and I could still go touch it, you know, like I could physically touch it. Whereas with stocks, bonds, any other type of paper asset, I didn't like the idea that it felt fictitious to me. You know, and I'm sure we could go down the fiat path if we really wanted to, but, you know, this idea that I'm like, what the heck are we buying here? And that's what got me into it. So I really lucked out with timing there, that I got interested, and then I spent, you know, a good probably too many years researching, and then going to the States and researching there. And that's where we picked up our first rental property, was down in the US. So
Wow.
glad we did it, and we're still doing it. And yeah, it's to me, it's like the easiest sell on an investment, to feel safe that it's not just going to disappear on you,
Hmm.
and that, you know, you can count on it to continually make money over time.
All right. And you live in Windsor, right?
Yeah, just outside of Windsor. I'm in Bell River, Ontario, so just kind of a little suburb of Windsor, you know, 30 minutes from downtown type thing, and way down the 401 to the end of the line.
And you chose to invest in the States instead of like Windsor?
Yeah, well, at the time, you know, I'll tell you, I was also and this is interesting. I haven't thought about this in a long time, but my thought initially was, hey, let's get a like a vacation home. That was my thought. Let's get a vacation home in Florida. So we were
Hmm.
looking in Florida, prices were cheap. And that was my big thing. And my wife, who is not into investing, she wants nothing to do with any of this stuff. She's like, you go do you. I'm in full support. I trust everything you do, which is great, but also scary at the same time. She said to me one day, she's like, why don't we just get a rental property and then use the money from that to go vacation wherever we want? And I was like, hmm, that's a that's actually a great idea. So we'll just rent it full time and go from there. So we had picked up a place in Fort Myers, and that was our first. Used a home equity line of credit, and basically paid all cash for it. And I was like, we're just going to chip away at this now. I was paying down our mortgage. Now we're going to chip away at this one. And that was our entrance to the market. Scary. Everyone thought we were crazy, and down the road, turns out it worked out okay. Maybe it won't always work out okay, but for us anyway, it was definitely a good entrance into the market.
Do you still have it?
We actually sold the Florida place the year before we built the house we're living in now. So now, like always, I always say that, in real estate investors, regret selling any property. And that continues to be true for me. Every property we ever sell, we're like, why'd we do that? But we did sell it as more security to make sure, we had enough cash to build this property. We had a lot going on at the time. So we had sold there, took a really nice profit over there. And, again, a little bit of regret, but also I felt like the cost was getting high. We had condo fees. I had gone super safe when we purchased and bought in a gated community. My thought was, I was sort of scared to buy anything that was more, I would say, more reasonable for a rental, and I bought something a little more high end, which still worked out. But now, knowing what I know, I would have never done that. I would have bought a property that just cash flowed as much as possible. So it was sort of one of those repositioning of the asset or the equity anyway.
Probably not the worst idea, but can you share numbers? Because you probably got this thing for
That
a song.
Yeah, that property, well, and for me too, like, I think back to it and I'm like what the heck was I thinking at the time? Like I wish I knew what I knew now, because I would have backed up the truck.
Bought them
Um,
all.
yeah, exactly. Like, how much can I get? But back then, this particular property, it was going for like over 300 before the crash in 2008-9. And we picked it up in 2011, I believe it was, for 95. Uh, so and that was in a gated community.
How many square
Just
feet? How many
it,
bedrooms
it
and
was
bathrooms?
it was about 1,800 square feet.
Oh my god.
It was a coach home, so sort of like a like semi-detached, but had condo fees. So none of the landscaping you had to do. It was actually a really beautiful spot. Ponds in there and all kinds of wonderful stuff. And then we ended up selling it in 2015. So less than 5 years later, for about, I believe the number was like 180. And now, had we hung on to
Oh
it,
boy.
it would be worth a whole lot more. So there's a little bit of remorse there, but again, at the time, it helped us sleep at night as we were building our forever home. We proudly call it here in Bell River. So
All right. Any idea how it fared in the hurricane?
that, honestly, when I saw some of the photos, I don't. And I was like, ooh, maybe it wasn't such a bad idea. I don't know,
Yeah.
but
That's what I was thinking.
yeah, exactly. So we are out in Florida. My parents actually live. They had a condo on the other side. They had purchased a couple years after I did,
Mhm.
down there to have like as a snowbird place. They had picked up their place for 38,000. And they just sold at the beginning of this year. I'm not going to share just because I don't know if they, I don't know if they'd be comfortable with that. But anyway, let's just say they did a lot better in terms of a percentage return. And then with all these floods and everything like that, I mean, I don't think their area got affected, but I think for them, it's like,
Right.
that's why they got rid of it. They're getting older and they just wanted it to be off their minds and not a worry. So I think they're happy about it.
So what are they gonna do? Rent in Florida?
Well, that's it. Yeah, they're kind of I think they're kind of using my wife's mentality of, well, let's just go anywhere, like let's just
Nice.
see where the opportunity brings us. So they're gonna spend a couple weeks in Florida next year. That's the plan, and do any trip they want. They're gonna be leaving for Iceland soon, so they're they're very active.
Hmm.
And I should also reference, like, their mindset is what makes me who I am as an investor. They weren't investing like I am in terms of the assets, like in terms of real estate or anything like that. But my parents were very they were savers. They both retired early, but still kind of pinching pennies in order to do it. But like it's like that was their lifestyle, and they both retired very early and are still doing just fine because they just got they've got their cash flow in order, and they're loving life, living it to the best of it.
Amazing. I sadly have, I don't know, right or wrong. I have like the opposite mentality. I try to make a lot of money so I don't have to worry about money.
Totally. And
And
don't
still
get me
retire
wrong.
young.
Yeah, they don't like, and they don't worry about money, which is great. But I'm like, I have this other thing, like, you and I sort of connect on that level. Like I enjoy the work too. That's obviously important as well. But I'm also like, I would never do what they did. I don't think. Like, I think I would
Mhm.
be too worried about it. I'm very it's almost like overcautious. Like, I want to make sure I don't ever get in a position where I'm going, holy smokes, shouldn't have done that. Yeah, they had their budget in order, and they've lived very modestly, I'll call it, but they've still done a lot. Like, they
Mhm.
golf, they travel, they do all of those things, but
Mhm.
they don't buy brand new cars. They don't buy the best of this or the best of that. they
Right,
just
right,
they just know what they want, and
right,
I think that's awesome. It's a great way to live, for sure.
right. Sounds like The Millionaire Next Door, the book.
Yeah, exactly,
I,
exactly.
I actually had to Google it, how old that book is. I think it's 30 years old now, somewhere around that.
Insane.
And it hasn't changed,
Hmm.
right? In my
Same
experience,
mentality.
yeah, in my experience, the rich people in that book are exactly my clients, and they'll sound a lot like your parents, except they're investors. They don't
Hmm.
buy new cars. If they do, they're mid level, right? They don't buy
Yeah,
brand name clothing,
yeah.
and anyone who does, they're at a really high level,
Right.
right?
Yeah,
I
my
do have a
parents,
client
I
with a
would say.
Cadillac, for example, but he makes a lot of money. You know what I
Yeah,
mean?
my parents, I would say, are like, honestly, they followed what the traditional mindset has been, which I think is, like, if people do that, they will live a great life, and they'll be financially okay.
Hmm.
And my parents did that, so they were like, no, we do a lot of saving.
Hmm.
My mom cut the coupons for the grocery, like, and saved money
Hmm.
wherever they could. They put into their RSPs and all of those things, and they go to the big bank and say, hey, here's the money I'm putting in every year, put it in all these mutual funds. So they did all of those things.
Hmm.
And it was almost like they didn't have to think about it, and I think they enjoy that. I'm
Hmm.
the opposite, where I'm like, I don't mutual fund, I don't know about that. But
Yeah, the math doesn't make sense to me.
yeah, they're like, hey, hands off. And I get that from, like, a property management perspective, like, where there's certain things I don't want to do, and
Hmm.
it costs money for those things to happen. So I'm like, I guess if you have no interest in what the market's doing or why it's happening, I could see how that might make sense,
Hmm. Hmm.
but for me, not so much.
So you bring up a lot of great points that I'm interested in digging into. So before we move on from your Florida property, like, you bought at like a really scary time.
Scary time for a first investment. Yes, absolutely.
Did you have you understood what the environment was that you were buying into, right?
I absolutely did. And like I said, my thought was, and I think that's why I had this vacation property idea in the back of my mind, was sort of like, if we pick up property and it doesn't work out as an investment property,
Hmm.
we have a vacation home. So that was sort of, I think, what drove me towards the
Right.
property we
So
selected.
plan
So I
B,
was,
you'll live in it
yeah, I
on
was like, you know
vacation.
what? Okay, so we own this property, and hey, like, I mean, we bought it for the price of like really well loaded car nowadays. So it was like, I was like, that was my um probably like save face plan.
Hmm.
So it was like, oh, we'll just hang on to it, and that's the way it's going to be. So it was scary, but at the same time, like I said, I'm like, I wanted to know that there was a physical thing, like I could
Hmm.
go to that place and be like, that's mine. And that at least made me feel better about things. And then we just made sure it could cash flow. It
Hmm.
wasn't like a massive cash flow generator.
Hmm.
I was more thinking appreciation play at the time, which I think a lot of people, sometimes maybe get too far into that. We barely cash flowed, and I was like, my backup was vacation home. So it was good entry for me. And I would encourage those who are listening, don't like, just find something that's going to sit well with you. It doesn't have to necessarily be the best property, right? There's always a better opportunity out there, but maybe it's not the right opportunity for you to get in on your first time.
Hmm. That's such a great comment to make. I find too many people are chasing unicorns, and then
Mm,
they don't get anything done, and then the market just
exactly.
keeps going the way wherever it's going. Generally over the long trend, it's generally gone up.
Yep.
Now
Yep. Totally.
I had no idea where we were going to go this direction with with this interview. I invested back through 2009 to 2008, 2009. I want to hear your experience. How was it hard to rent? Was Because it
Super
was the
easy.
Great Recession.
Yeah.
We
Yes.
Canadians barely felt it, but it's called the Great Recession or the credit crisis.
Yeah. And actually, I want to say, I can't remember which episode it was, but I was listening to one of the episodes recently, and I feel like this came up, where you were just sharing about this idea that when people aren't buying homes, or when they can't afford homes,
Hmm.
they have to rent. So it was, I didn't realize that at the time. Like, I would love to say, like, I had it all planned,
Yeah.
but there were so many people, unfortunately, like, I'm not wishing this on anyone, but I had no idea at the time that there were so many people that were holding so many homes as an appreciation play that
Hmm.
lost homes. But
Speculators.
there
Yeah.
was is speculating, but then there was so many people that lost their primary residence and required a place to live.
Hmm.
So it wasn't like the recession caused rent to go away or people to go away. It was like they still needed a place to live. So
Hmm.
that worked out, you know, fine for us. Like, we never had an issue. My realtor down there, like, this is where, having a great realtor, I know your team is very highly regarded. Having a great realtor is so important, especially if it is out of town, out of state, out of province, wherever. The realtor was awesome, was like my, essentially like a property manager, and getting it rented. And then here's the handyman, and we'd let the handyman essentially manage everything. And, I just trusted that handyman, and it was super smooth.
Hmm. Yeah. Handy people are worth their weight in gold.
Absolutely.
They're often
Yep.
my eyes and ears on the property.
Absolutely.
They also check on my other contractors if my landscaper is doing their job or whatnot, if the roofer did the right job.
Yeah. Eyes and ears for sure.
Absolutely. Need boots on ground because you can't be there that often. So I don't know what to ask next. Because there's so many things I want to ask. Like, for example, do you see any parallels between those times in terms of the economy compared to like these times?
Yeah, I
Should we be as
definitely.
fearful as the Great Recession?
Well, you know what? Honestly, I wouldn't necessarily be jumping into deals. Like, I picked up a flip off of a guy who, was sort of a last minute thing, wanted private money, and I sort of arranged it. One thing I will say is, over this decade or so, is I've realized how important it is to be creative. And, this person wanted private money, and given the market, given the uncertainty, again, I'm still, worst case scenario, if you have to hang on to a property, and it's not the end of the world, it might not, be amazing upfront, but, he wanted to pay 10, 12% interest for, you know, X amount of dollars. And I said, well, why don't we do this? We'll put it in my name, and you'll be sort of like the partner here, and we'll split some profits afterwards, with some conditions on it. So if it doesn't sell after X number of days, then basically like you're going to walk type thing. So I'm not diving into deals just to get into them, but I'm trying to be creative. I think sellers here in Windsor are still, in Toronto, I think it's hit you a little earlier than it did in Windsor. But like the out of town investors in Windsor are like gone. Like they're not around anymore. They were one of the main reasons why everything sort of like, popped up around in
Right,
Essex
right.
County here.
Right. Oh,
And
sorry, just pause you there. For the listeners' benefit, Windsor, a lot of these cities just outside the GTA, like Oshawa, Windsor, like London, Hamilton, they all boomed
yeah,
during the pandemic, during the 2 years of the pandemic, and now they've also fallen the most. At
yeah.
least that's what I'm hearing from my friends in Windsor, that it's fallen quite hard, and a bit more than surrounding areas. Probably because I was driven up by investors. Sound right?
Absolutely.
Yeah, yeah.
Yeah, and honestly, I think we're in a place where we're in a really crappy mode right now, because I think sellers still think that they can get, bidding wars. So they're not like really being flexible or realistic. Like they're not looking at data, right? They're just like, I want to sell my house and I want to get as much money as my neighbor did 9 months ago, right? And so they're sort of like, hanging on, and realtors are saying this thing, but the seller thinks, well, the realtor just wants me to sell the house quickly so they can, so there's kind of like this mismatch. But then
Yeah, yeah.
when you go in, it's like the buyers, especially investors are coming in sort of going like, no, we're not going to pay that. Yeah.
Yeah.
That's not going to happen. And I'm sort of that guy. So I'm trying to be more creative with deals, working with sellers so that, there is benefit for them, at the same time. And so they don't feel, let's say, robbed. Because I mean, really, like the market has robbed them of the opportunity to sell at the peak like everyone else did 9 months ago. Right.
What are you seeing? What are you seeing in the stock market then?
Oh, well, the stock market's a funny one because, well, that's weird. My like background just disappeared. I'm not sure why though. Is it gone for you?
Yes, it's black. And
Weird.
now it's back.
Oh, that was odd. But anyway, carrying on. People listening don't have to think about the background. But for me, the stock market, I think something that's really interesting is that, I mean, the stock market obviously exploded, ballooned way, like, some are calling it like the biggest bubble ever. So if you're thinking 2008 was bad, or 2099, 2000 was bad, like some are calling it like even worse than that. You can decide what you'd like, but when you look at the data and you start actually like looking at all the different factors, right? So like the Fed is raising rates. Obviously, Canada's, our bank is going to be, taking moves from the US as
Yeah,
well.
they have to do to keep our currency high.
Right, right. Quantitative easing has ended, and we're supposed to have started tightening, but we actually really
We
haven't.
haven't. It looks like we
So,
flatlined.
so when you're
There's been no
doing like,
tightening.
yeah, like when you do those things, and like inflation's still high, a lot of it is sort of like it's trailing data, like in education, like we use EQAO it's trailing data. It's like different sets of kids that you're using to try to figure out where to go next. It's the same thing happening here. You're using inflation, which is trailing data. So by the time the Fed is smart enough to sort of like realize that, hey, maybe things aren't, going to continue exploding, like they have a mandate to make it look like they're doing the right thing. They're just like crushing markets, and obviously real estate's a little bit lagged behind the stock market. So that where are we going? I personally don't think we're at a bottom. And then based on I look at Hedgeye is such a like macro focused, macro centric resource, and I love it. Basically, like they're looking at like not until like mid next year at least, for us to start looking back at, hey, actual growth might start happening again. The economy is, contracting. So like if our GDP growth is actually like negative, while we're raising rates while we're supposed to be taking money away from the economy. Like those things are not a good mix, and it's going to be really difficult for someone to say, I think, X, Y, or Z stock is going to, hit the moon. Might be
Mhm.
these short term, like, bull or bear bounces or
Yeah,
bull
relief
rallies,
rally.
but
Yeah, yeah.
it's just a little relief rally. And it's like a lot of times too, it's like a bunch of shorts closing their long, or a bunch of shorts closing them, which means they're buying.
Buying, yeah.
And that looks
Take
good on a
profits.
day,
Yeah.
right?
Yeah,
So,
yeah.
I'm doing like very cautious, bear call spreads, and that's about it. Like I'm not getting crazy with it
All
either,
right, right.
because who you could be wrong, but I don't foresee us, getting to new all-time highs for quite some time.
Hmm. Hmm. Yeah, I might plan to sell more bear call spreads when on a good pop. I don't think we're there yet.
Yeah, yeah.
I missed the last pop. Damn it.
Yeah, you know what? Hey, I actually I try to do a little bit, like I'm trying to be more, I don't want to get too excited. So I do little bits here, little bits there, but
Hmm.
when it starts running on you, I'm telling you, all of a sudden like your brain starts saying like what if this, what if that, what if this, and then when it rips back down you go, oh, thank goodness. But then the next time it happens again you go, maybe it's this time that I'm wrong, and it
Well,
can be quite scary for a period of time.
trend is your friend till the end.
Absolutely.
Just the trend happens to be bearish.
Yeah, exactly.
Any favorite stocks that you sell bear causal spreads on, like QQQ or Tesla or any other
Honestly,
or
yeah,
some garbage ARC maybe?
it kind of depends. But anything, honestly, and again, this is kind of taken like the hedge eye approach, is like anything that's growth is probably okay. Now, the one, I guess, challenge you have is that sometimes, you get the meme stock craze, or you get,
I don't
people that
too
are just
scary.
squeezing. Though that can be really, really scary. So picking like kind of like boring growth stocks can be really helpful. Picking the Russell, for example, like and using that, because
Hmm.
like the Qs, I mean, Apple's gonna, a couple good days for Fang, and your Qs are gonna be upside down, right? Even
Hmm.
though there's a lot of other, growth names in there. So, just not getting too crazy on any one thing. Recently, like Hedge Eye was saying, they were looking at shoot, what was it? Oh, there was like the ticker's Chef. So I'm trying to
Oh,
remember.
is that Tattoo Chef?
There it is. Yeah, that's the one.
Growth
They
stock?
they
Yeah.
threw that out there, and they just said like, what are you not going to do during a recession is pay that company, so it's like, oh yeah, that makes sense. So you kind of look at that, and then you kind of look around those things, but ultimately it's like, yeah, looking for a little bit of green on certain things, and still being, I think, conservative is probably smart. Like you don't want to go too close to the money, or you can get taken out over the ropes pretty quick, if things run for too long
All right.
and too high.
Okay, so quick disclaimer to the 17 listeners. None of this is financial advice, folks.
Hmm.
And also, when we're talking bearish stuff, we're shorting, as in we're making bets that profit when stocks either go down or at least neutral.
Yeah.
It's funny because early pandemic, I thought Peloton would be toast. It's like, who's gonna pay for $1,000 bike with a monthly subscription, and we're heading towards a recession? Well, I thought it was pandemic, right? I thought things were, I
Yeah.
thought it was the end of the world. Why was I wrong on that one? At least I didn't put
Yeah.
any money in the way of it.
Well, if you remember 2018, that was supposed to be a recession, right? And then what did we do? We printed money, and then COVID happened, and that was supposed to be a recession.
Supposed to
And
be,
then what
yeah.
did we do?
Printed
We
money,
printed money, and then we printed more money, and then more money again.
right?
And basically, like, it's like, I wonder, I'm not going to make a claim here, but
Hmm.
I'm definitely wondering, like, a lot of people are waiting for this Fed pivot to happen, but with inflation where it is,
Yeah, it's so
and with
high.
their mindset, and
Yeah,
with job, like with the whole jobs numbers the way they have been,
yeah,
it
positive.
makes it
They're really good
really,
numbers. Yeah,
yeah, it makes it really hard for them to pivot, right? Like
yeah.
they're like, oh, we're going to start pivoting now when inflation's high and like job numbers haven't, been crushed yet. So I think they're going to do a lot of damage. And then by the time the numbers change, it's, we're going to be in a bit of a world of hurt. And then also think about mortgages too. When the interest rates go up, sure, people might buy less homes, but what happens when your mortgage, your 5-year fixed is now due next month, or the next, however many people it's due next spring, or, these are people that haven't necessarily, they're coming out of these fixed that are 2% or, even sub 2%.
Mm-hmm.
And then all of a sudden it's like they're in a completely different world.
Mm-hmm.
What does that look like and sound like? Oh, and one of the spouses lost a job, so they're not willing to, re-amortize or, do any of these things. So who knows? I hope not. I hope that things turn around before then. But I mean, there's a lot of, let's just say the cards aren't stacked in our favor right now.
Definitely headwinds. Speaking to a lawyer that works with a lot of real estate investors, and transactions have slowed. He was actually saying that he's doing a lot of private mortgages. I think people are trying to shore up their positions via private because they can't, whatever. Yeah, it's a crazy world out there.
Yeah, for sure.
Kyle, can you tell us about these other side hustles you have? Like I was looking at your website. Like, don't you have enough work to do? You have two young kids.
Yeah, my wife says all the time, Chantal, she says that she's like, you have too many ideas for one brain. And honestly, she's right. I am like a learner. I only like learning about things I want to learn about or am interested in. Like I said, I'm extremely passionate about the work I do in mathematics.
Mm-hmm.
And that's one of the things that myself and a good friend and colleague, John Orr, we have a website called makemathmoments.com, actually a podcast just like you have. I think we only have 16 listeners though. So I think you are ahead.
You'll eclipse me soon.
Yeah. Well, I'm hoping anyway, but yeah, that's the Making Math Moments That Matter podcast. And, we do a bunch of PD for teachers and try to make it as accessible as possible. We actually have a virtual summit we do once a year that's coming up in November. And we usually have about, on average, 10,000 educators from around the world who participate. And yeah, we want to, I guess, share the math love and give educators who don't necessarily have the opportunity to do the learning, the opportunity to see that maybe math can look a little different for students than maybe we remember from math class.
How can parents make math look different for their own families?
Honestly, I think one of the easiest shifts you can do as a parent is ask more questions and tell less. So I see people often rush to save kids, and we do it in education too. Like teachers do it all the time, but it's like just ask them, and sometimes it'll take them a long time, and maybe they won't come up with the answer right away, and that's okay too. But when we rush to tell them the answer, they haven't learned anything, right? They got an answer, but they haven't learned what you're asking them. So if you frame the question in a way where you're giving them enough information and you're not making it ridiculous, like asking them for the second derivative of some expression is probably not a good idea. But things like counting, adding, multiplying, anything like that, you can get kids to solve proportions if you frame the question in a way that's accessible, especially if you have items or if you draw a model for them to sort of look at. Kids are very intuitive and they have strategies that that they can apply. So that would be my number one is say less, ask more.
So we've been very public about Jerry and we canceled the Kumon for the kids.
Tell me more.
It was the biggest source of frustration within our household. Us arguing with the kids, we'd have to sit with them to get it done. Even then, they twiddle their thumbs. We couldn't motivate them to do it. So both English and math. The only time they were fine were when they were in front of the tutor. The rest of the time, when the tutor wasn't in front of them, they struggled to get anything done, to be motivated. So Yeah, and it's also $500 a month of it's, and why would I pay $500 a month for grief?
Yeah, no, totally. And honestly, you said it earlier. You were talking about how context is everything,
Hmm.
and it's true in math as well. And I find a lot of times what we do, and I don't want to speak about that particular organization, but a lot of times we try to, I call them naked problems. We try to get kids to do naked problems, which are
Mm,
meaningless to them.
right.
So like kids are just trying to
Oh, sorry.
understand what
Just to
numbers
give
are all
context to
about.
the listener, it was there's just like small sheets of paper with math problems,
Right.
right?
And
Just numbers,
probably
just
like,
pure numbers.
yeah, probably like whatever plus whatever or whatever times whatever,
Yeah.
whatever it is. But it's like if you just take one or two or however many of those problems, and if you add context to it, it now is something the student like that your child can now relate to in the real
Hmm.
world,
Hmm.
and that can help them to drive to drive a strategy that they might use when
Hmm.
when a kid comes to you, and this is very apparent when they come to you and say, hey, we're doing 24 with the two dots and the line and this number, like that tells you they have no idea what the heck's going on, right? And if that's the case, then what are we trying to do here? So it's not about memorizing
Hmm.
multiplication facts or division facts. It's about engaging with the mathematics in a
Right.
meaningful way so that
Right.
hopefully it becomes automatic.
Right.
Like, I don't want to memorize it like a phone number. I want to be able to go, oh, like when this happens,
Hmm.
that happens. And some of those things will just be easy to recall, and then
Right.
others might require a strategy. So that's the kind of mathematics work that I'm really into,
Hmm.
and trying to make it accessible for students to kind of meet them where they are
Hmm.
and nudge them along. So when students are frustrated, they usually don't understand why they're doing what they're doing. Maybe it's not even appropriate for where they are. Like they
Hmm.
might not have the strategies or the methods to
Hmm.
to do what they're doing,
Hmm.
um, or it's just contextless. Like there's nothing like,
Right.
what do I relate this to?
Right. Yeah, my kids, they could do it if they put in the effort, but they had no interest in doing it.
Mm-hmm.
Versus when I give them like a money exercise, for example, we pay our kids to do things around the office. Really,
Mm-hmm.
yeah, we haven't paid the kids for any chores or anything. But when we ask them to do work, for example, and then we'll ask them like, then they'll say they want something, so they want to buy something. Say it's lunch, like lunch is $20, for example, and then I'll say, well, we paid you $5 to shovel the driveway. How many times do you have to shovel the driveway for lunch?
That's
Four,
exactly it.
right?
Yeah.
And they're like, oh, it's a lot of money. Like,
Nope.
yeah, and
Totally.
daddy paid for it, not you.
That's exactly it. And I'm telling you, what you just did, that is
Yeah.
that is the key to it. And you could do that in the car. You could skip count with your kids, like just randomly. Like my kids when they were younger would like be all into that. Now they're too cool for that. So that,
Mm,
that's harder. But doing little things when it comes up. So for example, what you just reminded me of is, usually on like Mother's Day, Father's Day, we like cook breakfast. The kids love helping and making it, and it's like we're cooking bacon, and there's whatever it was, 9 strips of bacon, and there's 4 of us, and like I love this opportunity, right? Because like I'm looking at it as a math teacher going like, okay, so like how many do we get? And like initially the kids will say about 2 each, and it's like, okay, about 2 each, great, okay, so I'll have the extra strip. And then they're like, oh, no, I want the extra strip. And then, no, mom wants the extra strip. Now the question is, so what do we do with the extra strip? And I mean,
yeah,
it's
yeah.
it's intuitive. Like the kids, they're like, okay, well, there was 2 for you and 2 for you and 2 for you and 2 for you. And now there's this one extra strip. What do I do? Well, try cutting it up. So they cut it in half, and it's like, is that enough? Nope. Okay, what do we have to? Oh, okay. So what do we call that? That's fourths. Oh, okay, great. Now it's like, so how many pieces did everyone get? 2 1/4 pieces of bacon.
Hmm.
Wow, 9/4 is the same as everyone getting 2 1/4. That is pretty cool. Like we can do this stuff. Like you have to think about it a little more. I have an
Hmm.
advantage because I'm a math teacher, and I think about this stuff all the time. But there's so many opportunities where instead of me saying, "Let me cut the bacon," right? You just let them do it. Now your bacon's
Interesting.
cold by the time you get it, but at the same time, you're helping your kids.
Interesting. I think I might try a math. Sorry, I might try a gas math. What do you call these problems? Contextual problems?
Yeah, like a
Yeah.
contextual for sure.
Okay. think I might try that next because we have a Tesla. So they're saying, oh, why do you put so much mileage on the Tesla? Like, well, you don't have to pay for gas on like the van. I don't have to pay for gas on the van. So I might pose them some questions. And Cal, do you have a referral for me for someone who does English? That's like you.
Yeah, no, I got none.
Nothing.
Yeah, yeah.
Seriously, are you that
Sorry,
you're that much
did I
of a
hear that?
rarity?
Did I hear that wrong? What did you ask? You said,
Is there a Kyle Pearce that teaches English teachers?
oh yeah, no, actually, there probably is. I'm just probably not the person to help you find them.
What?
Actually,
Okay,
you know what? I'll
17
hook you up with
listeners.
my sister. She's an IB English teacher. So there you go.
Okay. Maybe. Because, math and English. My point is, the point why we put the goal with putting the kids in the Kumon was we wanted them to enjoy school, be good at school, then hopefully they'd enjoy it, and then hopefully they'd stick with it. Right?
And that is so true. Like, I mean, it is very, and I think this happens in everything. And you see it in, again, I use sports as a context because it's like I think more visible to the parent because they're like a part of it, whereas they're not necessarily at school with their child. But like in sports, it takes a bit of both. Like they have to kind of like it, but they might not necessarily love it initially. So they have to get in there, but they also have to have some success because without success, then you're not going to like it. Like nobody likes doing something that they're not good at. So what do you do if they're struggling in a sport? Well, I mean, if you think it's a worthwhile thing to do, then maybe you go out and you play catch, to help them catch the ball and throw the ball around or whatever the sport might be. Or maybe you sign them up for like a skills camp that might help them see or feel that success sooner, and that can help motivate them. So the same is true for young children. If if a young child is in school and they're feeling like they aren't understanding or they're not feeling successful in math or whatever the subject might be, that's not going to be good in the long run, right? And oftentimes that gap gets bigger, and then obviously the distaste or the dislike for it gets larger as well. So it's a really important thing to kind of be in tune. And even asking teachers too, you read a report card, what does that say? That oftentimes it's very cryptic. You just have to ask like, hey, like where are we at, and what can I do to help support them? And if you do, you're going to put yourself and your child in a much better spot.
So Kyle, any contextual math problems around real estate we could ask your kids?
Ooh, I like it. I
And also
definitely
maybe throw them what age you think is appropriate?
Yeah, well, that's a great one. I mean, there's so much fun to be done, like with compound interest, as like that's
Oh, I love it.
that's amazing. And actually, I'm going to give you here's the one thing I'm going to give you that I think is great, but it will make you go poor. And I can show you the spreadsheet to prove it. Is with my children. What we would do is we would give them their allowance each week, which was their age, or not each. Yes, each week. So let's pretend, Talia is 10, and she is, so we're not pretending. She's 10, she's getting her $10 a week. What I would do, and they were really interested in this for a long time, and then it sort of faded a little bit lately, but we should get back into it, is like she'd collect her $10 a week. And then we'd put it in this like jar. We'd have like a save and a spend jar, and try to like do like kind of budgeting and all that. That's great too. Also letting them recount the money every single time is great because they love doing it and it's just helpful. So that's good. And like, don't do it for them, like let them do it. But then at the end of the month, you let them count up all their money, and to promote them not wasting their money, I would say for every $20 bill you have, I will give you $1.
Oh,
so that is compound interest at its best. Because now the problem is I don't know if you realize this, but if I'm giving you $1 for every $20
5%
bill that you keep
in a month, 5% a month
in a month. So work that out in a year. And my goal there was to try to like, if you say like, oh, I'll give you 1% interest, like it's not going to have an effect on a young child, right? Like they're not going to see the growth fast enough. And this is why as adults, it doesn't work for a lot of adults. It's why interest on your mortgage works, is that it's slow enough that people don't notice it as much. But if you make it so it's noticeable, then it's sort of like, holy smokes, like as they get $100 or $200 and like, oh, wow, like you have $200 and how many 20s is that? So think of all the questions you can ask. It's like, in order to figure this problem out, I'm not saying, multiply by 0.05. They don't even know. We're not talking percentage at all. I'm just saying it's a ratio. It's a 20-to-1 ratio.
Mm-hmm.
So you have $20, I give you $1. How much for $60? Now I'm working with ratios and they're actually solving proportions without cross multiplying. So that's a fun one to do. But like I said, you have to be willing to go poor because it will happen fast if you have a keener enough kid.
Because if I self-reflect, understanding compound interest is one of the reasons why I'm so frugal. Because why would I spend it when I can invest it?
Totally.
And that's always been my reason why I'm so frugal.
Yeah, absolutely.
Right? Why would I spend 60 grand on the kitchen in my home when I can go spend whatever in my investment property and it's going to return me more rent and it's make my property more valuable, more than the 60,000 I spend, right?
Mm-hmm. So it's all interest, it's that Nelson Nash, it's either interest earned or interest spent. It's like there's kind of no in between there, and like I think it's a great lesson for kids. I think it's a great lesson for us as adults to be thinking about, because it's happening in the background and very slowly, but when you see the impact and the influence over time, it's quite remarkable.
Mm-hmm. And then for the listeners' benefit, again, Millionaire Next Door, including my clients, they often don't spend in their homes either.
Yeah.
It is totally the shoemaker's children analogy. Like, our homes do not get attention.
Yeah.
Our investment properties get all the attention.
If I had the, the only say, that would be the case for me as well. My wife is a great balance because she helps me realize that, she's like, you would live in, a shoebox and, and enjoy nothing, if I wasn't here. And I'm like, you know what, you're absolutely right. So she's good for me. And they say opposites attract. So in that regard, we sort of balance each other out.
Right. I will add that usually there usually is a breaking point where people do upgrade. For example, I have a client who probably didn't spend much on their own home, but then they bought themselves a pretty sizable, nice chalet up in Blue Mountain.
There you go.
Right? So
I think at some point you start to question yourself and say, like, why am I doing all of this stuff? So that's kind of where my head is these days, is like, finding that balance. Life is short, and that, it's something you got to be thinking about as you're moving forward.
Yeah, I would say chair is probably similar to Chantel, because the last home we bought and we renovated. Not a huge renovation, but it was sizable. But yeah, so now our home is quite nice. But it wouldn't have been my choice.
Yeah, absolutely.
I'm good with 70s, 80s kitchens and fixtures. As long as it works, I'm good. It works and it's clean, I'm fine.
I love it.
Kyle, thanks so much for doing this. Any final thoughts? Again, our 17 listeners, some of them have kids, some of them don't. I don't know. Any final thoughts?
I would say anybody who's sitting there and, has been on, we'll call it on the sidelines these past couple of years, has been, probably not a bad idea to sit on the sidelines versus hopping in, as we now know. But, if you're sitting and you're not taking that action, reach out to someone in your area. Like in our area, we have a lot of people who have talked about real estate for so long and they haven't acted. And, so oftentimes we'll JV with them. So my partner, Matt Bigley, who's a realtor here in Windsor, Essex, fantastic guy. I actually was saying to Erwin, we got to get him on the show. Him and his team are amazing, but Matt and I typically work with folks who have maybe, like, they want to do the learning, but it's like time just keeps going by and going by. And hey, guess what? That $20 bill, it's not getting that $1 compound interest when you're, just sitting and watching. So I would say find someone who knows what they're doing, partner with them, and learn, learn the process. So that's what we tend to do around here. We try to get really creative with deals, and we partner with folks, whether we know them or have been referred to them, or they've been referred to us, I should say. And we try to also sort of mentor at the same time. So if anyone's in Windsor, Essex, or interested in Windsor, Essex, of course, reach out to myself or my partner, Matt Bigley, and we'll get you taken care of.
Fantastic. I think it's wonderful advice. For For example, the people I find that usually get burnt on investments usually did almost nothing in terms of research.
Well, it's kind of like it's like an either or, right? It's like they either jump in because someone like me says you need to get in, but they miss the other part. And or the other hand, where they go like, okay, I don't want to be that person. So then they sit and they sit and they sit and they sit. And it's, again, remember we talked about it earlier, on or off, it's all in or all out. And I think, to me, it took me 2 years to buy that Florida property. I did research every single night. I searched the entire US. Like, I know so much from that work. Is it worth it? Great. But if you're not actually doing the work, and if you're not going to pull that trigger, then I would say you've got to take that next step, which is don't just dive in blind. Go find someone and, work with them and make sure that they're willing to kind of take you under their wing.
Check references. Yeah. Ask around. Yeah.
Absolutely.
Fantastic. And I see that your virtual conference does not conflict with ours, so I fully expect to see you on November 12th.
Yeah, myself and my co-host John Orr are coming, and I'm still trying to arm wrestle Matt Bigley into it, who I just mentioned there.
You had to arm wrestle him? I got picked.
Yeah, well, you know what? I think it's a scheduling thing, but you know what? I will show up at his house, and we will both physically drag him into the vehicle. He was
Fantastic.
with us the last time we did it, so looking forward to it.
Awesome. All right. Kyle, thanks again for doing this. Thanks for your time. Have fun at hockey.
Yeah, thanks so much, eh? Nice to see you virtually again, and we'll see you in person in just over a month.
Yeah, don't remind me. Thanks, Kyle.
Cheers. Have a good one.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.